Hello, everyone. Welcome to our Switch Markets live webinar, the 5-8-13 EMA scalping strategy. Today, we're going to go over this powerful strategy. I'm going to show you exactly how to set it up on TradingView and your MT5 platform. Plus, we're going to give you a little preview of what that Pine Connector functionality looks like in real time. So I'm excited to get this webinar going. This is the first of our Switch Markets live webinar series. So welcome one, welcome all. I'm confident everybody's trading well. It's been sort of a challenging week out there, but not necessarily a bad one. We're starting to see a little bit of price action, and the 5-8-13 can really help you get in on not only short-term price action, but maybe even swing trades, maybe even position trades. We're going to look at a little bit of everything today. I want to put it on the US 500 on a real short time frame, and then we want to back off and maybe put it on Bitcoin on maybe a 4-hour or a daily time frame. The great thing about the 5-8-13 EMA is that it is flexible. It gives you an opportunity to trade any market you want on any time frame you want. The biggest thing we have to remember is you need to pick time frames that are going to give you enough volatility or enough price action to actually make a profit and get on the right side. You also need to be trading this during the right times. Now, if we're using a daily chart or a 4-hour chart, you have a lot more room for error than you do on, say, a 5-minute chart. So remember, we're looking for deep liquid markets. We're looking for volatility and an opportunity to cash in on those moves that we see each and every day. So I want to welcome everybody to this first webinar here at Switch Markets. We've launched our channel. We got a few new videos up. We've got another great video coming out next week on Pine Connector that you're going to want to see. There's a lot of work went into that one, and it's a pretty good one. If you don't know much about the functionality of Pine Connector, that may be a pretty good place to start. And already we see a familiar face. Yes, sir. Good to see you. Yes, sir. Welcome. All right, everybody. Let's go ahead and get on with the webinar. So essentially what this is, what the 5-8-13 is it's a way for you to attack the market from a position of strength. And what that means is you're not going to be guessing at your entry points. You're not going to be guessing at what the market's doing. You're not going to be guessing at trend direction. What you're going to be doing is you're going to understand exactly which way the market's moving. You're going to know exactly where to get into the market, and you're going to know exactly where to put your stop losses and profit targets. This strategy isn't rocket science. Simple is always better. If you find yourself involved with a strategy that is too difficult for you, that you don't understand, that it's not intuitive, then it's worthless. You've got to be able to get a strategy that makes sense, that's easy. You know, a lot of you have watched some of my streams over the years. Some of you haven't. If you've never seen one of my streams, there's only a few rules. And I do have rules on my streams. Number one, simple is almost always better. Simplicity, the elegance of simplicity, get lost in it. Things don't have to be complicated for you to trade. Of course, the second one is if it makes money, it's always the right answer. And the 5-8-13 gives you a chance to make money. There's no two ways about it. There's a few times you should trade it. There's a few times you shouldn't trade it. I'm going to cover it all today in today's webinar. Let's see. Hermit, good to see you. Hi, sir, from India. Well, good to see you, Hemant. I'm sorry about the names, guys. I'm terrible with names, but I believe that's Hemant. Hi, sir, from India. Well, I'm Shane Vernier. I'm from Dillon, Montana, southwest Montana here in the United States. Really going to be doing some traveling coming up this fall over across the pond, so I'm looking forward to seeing some new country. Not quite to India, but closer than I've ever been. So welcome. All right, guys, let's go ahead and get on with this. Remember, if you want to trade any of these things, go ahead and check out Switch Markets. If you aren't already a member there at Switch Markets, they've got thousands of markets, real tight commissions, 0% commission accounts, tight spreads, fast and easy deposits and withdrawals. One thing that is brand new to the Switch Markets service suite is we now have independent wallets that you can use, segregated wallets that you can put your funds in before you pass KYC. That's going to get you up and running a heck of a lot quicker than in previous times. So I wanted to cover that really to begin with. All right, 5-8-13, here we go. Soft Chamania, hi, how are you? I'm doing very well. Myself and our boss, gotcha. I'm Shane, nice to meet you. All right, guys, here we go. Let's get started. The strategy rules are simple. Now, remember, this is a strategy you can use on any time frame, on any market. The rules are easy. Easy is always better. Don't let yourself get confused. If you have any questions, be sure to ask me in the live chat. I'll be sure to answer them. But this right here, guys, this is as easy as it gets. Okay, our strategy rules are very simple. There's 3 of them. When the 5 crosses over the 8, we're going to look to trade. All right, that's the first part. When the 5 EMA crosses over the 8 EMA, we're going to look to trade. Price must be either above all 3 or below all 3 EMAs for us to enter the market. And we're going to buy or sell on the first bar close that meets that criteria. All right. Now, Before we get going any further, I'm going to go ahead and show you exactly how to set this one up on TradingView and MT5. So if you're on TradingView, the first thing I'm going to say is if you're using the free version of TradingView, you're probably not going to get access to all 3 EMAs. And what you're going to want to do here is you're going to want to make sure you're going to want to make darn sure that you have access to your 3 EMAs. Now, there are some 3 EMA strategies maybe underneath some community scripts. You can certainly look into that. I'm just going to show you how I set it up, and I do it manually, not each and every time. I save it into a template. But something like this is going to be exactly what you're going to do. You're going to do the moving average exponential. You're going to go ahead and give that 3 clicks. All right? Easy. You've got your 3 moving averages right up there. What are you going to do? 5, 8, and 13. I always make my 5 red. And the reason why I make my 5 red is I want to know exactly where that 5 is. That's my hot EMA. That's the one that's going to get us into the market. Now, our source is always going to be our close. We're just going to base these EMAs on our closing value. We're not worried about smoothing. We don't care about calculations. So here we go, something like that. Okay, so now our next sequence is going to be what? It's going to be our 8, 5, 8, 13, guys. It's just a combination of basically different duration moving averages. And I always like to make my 8 blue. So we're going to go ahead and blue, and we're going to get that lined up for you right there. Okay, so there you go. And then our last one is the most important one. A lot of folks don't believe really in the utility of the 13 EMA. It's the most important one. It's my favorite one. Don't ever forget to put your 13 EMA up. I have a lot of traders that say, Shane, why don't we just use the 5 and the 8? And I'm saying you can't use the 5 and the 8. You've got to use the 13 because that is what gets you into the market. It shows you where the market is. Okay, so we just added our 3 EMAs, and you can see right here, this, in fact, would have been a sell entry. More on that in a minute. Let me see, Harry. Good to see you, Harry. Welcome. Hello, everyone from Germany. Right on. See, we've got a truly global community. We've got India. We've got Germany. We've got, we've got all sorts of folks from all over the world. The markets don't care about languages, and they don't care about cultures. All they care about is traders and money. That's it. So that's how you get set up on your TradingView platform. Now let's go ahead and go over to MT5. Now, you'll see this EA that we have running up here. This is Pine Connector, and I want to sort of promo this before we get started adding the EMAs. This Pine Connector can help you bridge the gap between your TradingView and your MT4, MT5 platform. Now, we've got a video coming out next week. I urge everybody to check it out just so you can see the form and the functionality of this powerful tool. But right here, you've got your TradingView. If you're a TradingView trader, Pine Connector helps you automate, or you can use discretionary or automate, but it helps you get your trades down with MetaTrader 4 and 5. Essentially, it's this easy. You're going to go to TradingView. You're going to set an alert. Pine Connector is going to pass that alert on to MT4 and MT5. And what happens then? Your trade gets placed. So this is what Pine Connector looks like. Essentially, what you've got here is you've got your expert advisors. We showed you exactly how to hook it up in the video. So don't worry if you don't know anything about Pine Connector. You will probably after next Tuesday is when that one's going to drop. But take a look at what we have here. This is Pine Connector. Successfully connected to Pine Connector servers. We've got a trade going right here. In the dollar yen that I placed a little bit earlier today. It looks like it's doing pretty well. Something like that. So that Pine Connector really, we're excited about that functionality. If you're not an automated trader, it may be something to look into. And once the video comes out, we've got a great blog on it already. You can get hooked up very, very quickly. Honestly, it only took me a few minutes and a little bit of troubleshooting, but I'll show you exactly how to do that in the video. All right, guys. So if we're going to trade the 5813 EMA, MT5, we go to insert, indicators, trend. And what are you going to do right here? You're going to click on moving average. And what do you have to do? You've got to get your durations down. Exponential, I always like a thicker line, but let's just go with right there in the middle line. And that's going to be what? That's going to be your 5, and you just repeat. So indicators, 5 down to trend. You're going to go to moving average. You're going to click it again. Make sure exponentials click apply to the close. And we're going to go ahead and set that up with an 8. And I know most of you know how to do this, but believe me, a lot of folks need help just getting set up, and that's what we're here for. We're here to get you up and running, this sort of webinar style. We show you the basics, and then we're going to show you some more advanced stuff. We're going to show you some live trades here in a minute. Right there, indicators, trend, and then what's your last one? Moving average. Got to be exponential. 5813, the most important one in my book. 5813. I typically like a purple, but you guys can use whatever you like. I like that type of color. Just because it's sort of a serious color, I would say. And the 13 is definitely what I like to do when I like to trade. There's the 5813, guys. No problem at all. Okay, so the question becomes, how do we trade it? How do we trade it successfully? Here's our rules. Very, very simple, very, very straightforward. 5 crosses the 8, we're going to look to trade. When price must be above the buy or below the sell on all 3 EMAs to enter the market. That's key. The 13 is key. And then we buy or sell on the first bar close. That's it. That's it. Okay, so what would a trade look like? This is a good look right here. You can see you've got sort of this we're milling around up here, and then the 5 crosses under the 8. The price closes beneath all 3 EMAs, and then you get on that downward trajectory. All right, let's go ahead and place a couple of trades and see if we can't find one. All right, so we've got our 5, 8, 13 lined up. Let's go ahead and back up and take a look at Bitcoin here. Now, Bitcoin's fascinating to me. It's just been an incredibly bullish market. We've really been fortunate with some of our market calls this year. Fortunate meaning we've had some that have been questionable. We've sort of gotten lucky with. There's been no luck involved with Bitcoin. We've had a pretty good idea that this thing was bullish, and it's been bullish for a long time. So 30-minute chart here today. Look at what you have right there. There's your opening bell, ding, ding on Wall Street. And what happens? You get the beautiful crossover. The 5 crosses over the 8. Remember, red is the 5, blue is the 8, and then your 13 is your purple. That's absolutely key. So what would that trade have looked like? That trade right there, that would have been your entry point. Now, how do we design these trades? And don't worry about this RSI. We're going to get to that in just a second. So how would we design these trades? Remember, the crossover in itself gives you a real good opportunity to set a stop loss and a profit target. For me, I prefer the stop loss beneath the previous defined swing high low, or excuse me, swing low in this case, or above the swing high on a sell. That could be your trade. Now, a lot of folks really like to be more aggressive with their stop loss and keep these trades cheaper. You can do that. You can just put your stop loss beneath that trigger bar, what we call that signal bar. For me, either one's acceptable. The biggest thing you have to do is always balance your risk to reward. So now if we have an entry point right here on this Bitcoin trade, and we have a stop loss right here beneath the trigger bar, okay, where should our profit target be? Now this is where my philosophy differs from many in the markets. I love a standard 1-to-1 risk versus reward ratio, and this is a ballpark number. It's not exact. Feel free to do the exact math. I like 1-to-1 ratios because all I have to do is win more than 50%, and I'm going to be a profitable trader. That's what I like. That's what I like. So when we get in here and we start rooting around and saying, okay, what kind of trader do I want to be? I want to be a trader that's profitable. I want to be winning trades all the time. I want anything above 50% is my edge. So let's say I get in with this and I'm doing a 1-to-1 and I'm trading the 5, 8, 13 on short time frames. And let's say I win 58% of my trades. I have an 8% edge. 8% doesn't sound like much. Most venture capitalists, boy, they would kill for 7%. A lot of folks really believe in taking 1-to-2s and 1-to-3s. I'm a big believer in 1-to-1s. Now, the other thing we can do is just talk market structure. That's all we have to do is say, okay, Shane, I'm going to let the market tell me what I need to take out of it. And I'd say, well, I know there's a lot of SMC traders in here, smart money concept traders. They understand the concept of liquidity sweeps. This swing high up here, this area where the sellers have stepped in. Look what you've got. You've got a pretty good area, a pretty good zone up there. What would that be, a supply zone? Pretty good supply zone where everybody's just decided to be a net seller. Well, now we're on the rally. So could we make our profit target up here? Absolutely. In this case, you would be looking at making, let's see, 19.9. Let's bring this profit target down a little bit, right into the guts of that range, and that'll be like 19.8, something like that, 19.811. And we got long from 118, 118.745. So roughly, what, about 1,000, something like that. So we're going to try to make $1,000 on this trade, or 1,000 pips, or whatever you'd like to call it. If you're in the cash market, it would be $1,000. Right there, you're looking to make 1,000, and what are you risking? You're risking about 600, 500. Somewhere in there. What is that? That's a 1-to-2, 1-to-2.5, something like that. That's that type of ratio. What if I wanted to extend my stop loss down here, put it beneath that swing low? Does this trade still work? You need to make sure you're at least a 1-to-1, but it's pretty close. So there's all different ways to trade this. Your success trading the 5, 8, 13 is going to depend on a couple of things. Number one, it's going to depend on you understanding what to trade and when to trade. I'm going to help you with that right now. And it's also going to depend on how you manage these positions. Because theoretically, with a 5, 8, 13, if you're trading longer time frames, maybe you want to step back to a 4-hour chart and trade some Forex. Theoretically, you're always going to be in the market. Unless you go up and get stopped out without a crossover, or you go up and hit your profit target without hitting a crossover, you're pretty much always going to be in the market. Your success is going to hinge on your ability to manage your risk, read market state, and stick in there until you get paid off. There's no two ways about that. You're going to have to know that. Let me see. Yes, sir. I thought that was a US dollar Japanese yen chart. Yeah, it was. We started with the dollar yen on that MT5. All right, guys, let's go ahead and let's take a look at a few other. I want to look at some other markets and see if we can get a live trade right now. So let's say I want to do a conventional trade. Let's go to a 4-hour chart. Let's go ahead and look at that dollar yen. Okay. What do we have going here? We're going to talk about confirmation in just a second. What do we have? We have something really beautiful happened. Right there, your 5 is going to cross over your 8 right in that zone. Look where your bar close is. This area right here, this bar, that's your entry. You say, Shane, what are you talking about? There's your crossover. Right there, there's your close. And look at this. I mean, you're long for the big move. For the big move. So what you could say is, okay, what is my goal on the 5-8-13? If you want to take moves, big moves, back up to a 4-hour, I mean, essentially that's a position trade. You're in that trade for over a week. But boy, did it pay you. Now take a look at what else happened here. Then you got the top in. Now you got the cross under and the bearish close. So that would have been your short close. That would have been your short trade right there. Now, one last thing I'm going to say about trade management, and this is a good example because it really shows you the power of these strategies, especially if you want to step back to longer time frames and be a position trader. Take a look at what you have here. You've got a long that you caught beautifully. Okay, you caught this long. Maybe you just stay in the trade until the 5 crosses back under the 8 and our criteria is met. Maybe that's going to be the way that you manage these trades. Personally, I prefer market structure and static risk versus rewards, but there's no reason why you can't just stay in until we cross over again. If you do take on that type of strategy, it gives you a chance to make a lot of money, big profits, big trades. I see everybody on YouTube. That's what they do. They get on these crossovers and they get some trend line strategy and they stay in there and they wait for the big runner. And eventually, after losing 50 in a row, they'll get a big runner and maybe they're profitable by 5 cents. I don't know. Personally, I like the other way where we can do it, but you can do it this way. Remember, it's up to you how you manage these trades. I'm going to give you ideas and show you how I would do it, but just because I would do it in a certain way doesn't mean you have to. If you always want to be in the market, then it's as easy as, okay, there's my crossover, there's my entry point, I'm going to stay in there, okay, crossed back under, now I'm going to go short. You can always be in these markets. There's no question about it. The only time you get into trouble doing that type of an approach, is when the market flattens out and you're constantly crossing over. And if you're constantly crossing over, that's trouble. That's big trouble. All right, let's go ahead and see if we can find one more market, and then I'm going to talk a little bit about confirmation. Let's get back over to our MT5. For right now, let's go ahead and let's go to expert list, and let's go ahead and get rid of our Pine connector. I don't want you guys to get too distracted. We're working on the 5-8-13 right now. Okay, right there's a dollar yen. Let's go ahead and go to Swissy. Let's drop the Swissy in here. Let's take a look at a 15-minute chart. Now, the biggest question I get almost religiously on YouTube and in the How to Trade community in our chat room where people just message me is the following. Okay, what time frame do I use it on? And I don't get angry at anything. I like to trade. I love to talk trading with you guys. But when we start talking about, well, what time frame do you use? I go, it really depends. What time of day are you trading? Now, if you want to trade this thing in a true sort of swing trading approach on a Forex pair, Forex major, I recommend the 4-hour chart. That can get you into some good trades, some good stuff. Now, if you want to trade it intraday, 15-minute chart's pretty good. Let's take a look at the 5-minute chart right here. Now, if I was going to trade a 5-minute chart on something like the Swissy, the US dollar, the Swiss franc US dollar, when would I trade a 5-minute chart? You've got to do it when the market is at its deepest and most volatile. When's that going to be? It's going to be typically on your London-New York overlap. So if I was going to trade a 5-minute chart on the Swissy, you could start at the London Open and maybe trade it all the way throughout the London session to the London close, with the back end of that session really being after the New York traders get into the office and you get more volatility that way, more volume, more participation. You could do that. I don't have any problem at all with that. If I was trading the short time frames, the 5-minute chart, the biggest thing you have to try to do is you have to try to avoid just getting chopped to death. Areas like this are a real challenge. You see the frequent crossovers. You know, you're in, you're out, you're in, you're out. That area right in there, you've got to be very careful of. However, you did get a fantastic, just a beautiful, clean break right here. You got to cross under, and then you're short, you're short, you're short, and then you sort of belly back, and then you're long right here with that crossover and prices above all three moving averages. And then we start moving higher. Interesting stuff right there. But this is pretty good. Look at your MT5 platform. Works the same way, guys. Works the absolute same way. You'd have been long from here. Stop loss would be down in here somewhere. 5-minute chart, I would give myself a little more room. I probably would be looking at swing highs and swing lows. I wouldn't be going with the trigger bar. One other thing that can really help you with regards to short time frames that we're going to do right now, we're going to trade some futures on very short time frames, is confirmation. Now, confirmation is one of those things that everybody believes that they understand. It's like, okay, well, confirmation. I love confirmation. I go, well, okay, you love confirmation. Do you know what confirmation is? I always say that because, I mean, it's the truth. Does anybody really understand it? I've heard convergence. I've heard divergence. I've heard all of it. Confirmation is a very simple concept. 2 indicators tell you the same thing. That's it. What does confirmation mean? In technical analysis, confirmation refers to the use of an additional indicator or indicators to substantiate a trend suggested by one indicator. Now, it doesn't have to be a trend. It could also be the opposite. You could get multiple indicators to tell you you have a flat market on your hands. So I would say it's either going to validate the trend or sort of validate lack thereof. Interesting concept. For us, on this 5813 EMA, what we're going to do is we're going to use the Relative Strength Index, RSI. Now, RSI has been around forever. I get a lot of questions on RSI. RSI is as easy of an indicator as I can get to establish confirmation. And the reason why I use it is because it is simple. I don't have to know much about anything to understand how to apply RSI as a confirmation tool. It's easy. Relative Strength Index, invented by Wells Wilder Jr. back in, I believe it was the early 80s or late 70s. This thing's been around forever. And the reason why it's been around is because it works. Essentially, it's a set of moving averages of moving averages. They grab all those different numbers and they develop a pricing envelope, or a value envelope, which you see right down here in this lower pane. So if we're going to work with RSI, there's a couple of things that we need to understand. Number one is how to add it. So let's go to Trading View, indicators, and you just go down to the Relative Strength Index. Public domain indicator, you don't have to pay anything for it. Right there, Relative Strength Index. You go ahead and give that a click, and you'll see essentially what is a little window at the bottom of your screen. So I like it as a window, not a chart overlay. But what we're going to do now is take a look at the settings. I get this question a lot as well. What are the settings? Just leave them the same. RSI length is the 14th. I'm already thinking about next month. 14. The source is the close. The type is the SMA. Don't worry about smoothing. Don't worry about any of this stuff. All you need to know, RSI length is 14 and the source is the close. Those are the default settings. Don't change them. That's what Mr. Wilder intended when he was going to go ahead and use his Relative Strength Index. Okay, so what do we have going now? I've got a 1-minute chart on the US 500, all right? I want to go ahead and we're going to make a few trades here, so let's just go ahead and get my paper trading up and running here on our Trading View platform. And let's go ahead and just go down a little bit. So if I'm going to do this on, let's say, a 1-minute, ultra short time frame, the first thing I need to have a volatile period. I've got to be in there when the market's moving. When is that typically? For the U.S. indices like the U.S. 30, U.S. 100, U.S. 500, I would focus solely on the U.S. session. I would, more than likely, probably just the first 3 hours of the U.S. session, but you could trade the whole session doing this. For Forex pairs on a 1-minute chart, it's really hard. Forex doesn't move that much, but if you were going to do it, you could do it maybe after key events, maybe like 2 or 3 minutes after an NFP or a CPI number or a Fed release. You could do it then. You could also focus just on that London-New York overlap, those 3 or 4 hours where both markets, everybody in the world essentially is trading. That's what I would do on a 1-minute chart. Don't get too carried away with trying to trade 1-minute charts. Maybe during the afternoon for Forex, maybe after the London close. I really don't. I don't recommend that. Okay, so what we have right here is a US 500. So if I'm going to use RSI as my confirmation device, how is it going to work? RSI is easy, guys. It's so easy. The top of our envelope there is 70. The bottom of our envelope is 30. When price goes above 70, that means that the market's overbought and you're going to look to sell that market. How are we going to sell that market? The 5 is going to have to cross under the 8, and price is going to have to close beneath all 3 EMAs. That's it, and that's all. On the flip side, if I was going to buy, if I wanted to buy the market, the RSI would have to be below 30. That suggests the market's oversold, and I'm going to be able to enter the market when the 5 EMA crosses the 8 EMA and price closes above all 3 EMAs. It's easy. Doesn't get much easier than that. So what do we have going right here? Well, we've got a market that really is getting up towards the top of being overbought, but we're just sort of in the center. We're going sideways. We don't really have an opportunity yet to trade. Let's find another market. One of the markets that works very well is the US 100. This is one that typically moves all over the place, even though today, not so much. We're not really seeing it. This right here, you can see our RSI is right around 50. That means it's a no trade. That means you're not going to trade it. All right, let's go ahead and see. Let's just keep flipping through our markets and see if we can find one. How about gold futures? Gold futures we've got right here. What do you have? You've got an RSI on a 1-minute chart that hasn't left the envelope really since this area back here at about 8:32 my time, 10:32 Eastern time. So this is problematic. We don't really have a trade here either. Can we step back and find a time frame where we may have a trade? Let's go to try a 5-minute chart. Does our 5-minute chart give us an opportunity to trade? No, not really. Big time breakout, big time uptrend, really. Look at this uptrend. 5-minute chart uptrend. What do you got right down there? Sort of before the U.S. Open, you were deep into oversold territory. Right there, right around 20. You got a 27 reading on your RSI. It was time to buy. Where was your buy at? Right there. The candle can be negative, but as long as it's above all 3, that's a go. You caught that move. That's beautiful stuff, guys. That's powerful. That's a powerful type of an indicator. When would you start trading something like gold futures? You probably do it, about 8 a.m. Eastern, 8:30 a.m. Eastern, depending on the news cycle. Big news out today. Retail sales was a big one. We're going to cover all the news events tomorrow on our How to Trade live stream. So be sure to join us there if you're interested in sort of analysis on fundamentals and some of the levels that I'm trading. Now, this is interesting stuff. You caught a big move there. Let's just keep looking. All right, let's go. Let's see. Dollar yen's on the move. Euro USD. Let's go Euro USD 5-minute. Okay, still no trades. Why don't we have any trades on this real short time frame? You don't have any trades because your RSI is within the envelope, the 70-30 envelope. Let's go to a 1-minute. How about now? Okay, I'm getting interested. Euro USD. Typically doesn't trend. It really doesn't. I mean, it'll make sudden moves, but typically rotates, goes sideways. In any case, you see this action right here. We've got a long way to go before we get into oversold territory. We would need this 1 minute. We would need this to drop down into here somewhere so we could actually get an opportunity to buy when the 5 crosses back up over the 8 and you get a good close over all 3. All right, guys, I'm desperately trying to find a trade for us to execute here. Typically when I have to do that, I go to E-mini NASDAQ futures. This is a 1-minute chart, so we're starting to fall out of bed a little bit. Let's go ahead and see what we can do. Let's see what we can do. This one typically doesn't disappoint us ever. We usually have trades. This is the NQ contract. This is the September E-mini NASDAQ futures. And what we've got going here is just a real interesting thing. You've got a big dump, and now potentially we're getting down towards the bottom of that oversold area. So we got an opportunity here maybe if we trend a little bit lower to buy it on the comeback. Unfortunately, we don't have that much time. So let's go ahead. Let's take our time frame way down there. 15-second chart. Okay, 15-second chart. I don't recommend doing this, but it is going to show us exactly how we can trade this. We're going to look to buy, and we're going to look to put a market order on once we get our crossover. Now, down here, you'll notice right at the bottom, we hit 29.20. So we were in oversold territory. So now our strategy is simple. We're going to buy as soon as price closes above all 3 of these, and we get a crossover. Do we have a crossover yet? No, we do not. No, we do not. Are we going to get one on this bar? I don't believe so. We've got to wait. Now, our crossover, you're going to need to wait for this next bar. This crossover isn't finalized. You got to wait 1 bar removed because if this thing reverses, then you're not going to have a crossover, and we're going to be sitting here going, okay, now right here, we're going to look to buy right on the close. Okay, we're bought. Now, we're long. Why are we long? We're long because we were in oversold territory. Price broke back above. We got our 5 crossed over our 8, and now we got to close right there above all 3. The biggest thing for us on this trade right now is two things. Number one, we've got to know where our stop loss needs to be. I'm going right there beneath that swing low. On a 15-second chart, you're way too tight up here. What are we doing? We're taking a long position, extremely short time frame, extremely short. We've got our stop loss right there beneath that swing low. Where would our profit target be? Well, if my stop is down there right around 23,239 and I just bought 23,256s, that's going to be about 17 points. So I'm going to need to get at least 73 on this. At least 73. I believe that's how it works. Yeah, at least 73. That would be a 1-to-1. Somewhere right in there. Is that a good trade? No, it's a 15-second trade. What if you wanted to take a position? You'll notice that that 1-to-1 lines up sort of with the top of our market structure as well. What if you just wanted to take a position and say, Shane, I like going long. I want to be long the NASDAQ today. You could put it up there at a 1-to-2. If you put it up there at a 1-to-2, what would it be? 290? Something like that? It's risky. Remember, as you try to stretch these trades into 1-to-2s, 1-to-3s, 1-to-4s, your winning percentage will go down. So you have to be prepared for that. Of course, a winning trade is going to pay you off. Last thing I'm going to say about this strategy is this. It gives you everything that you need to do to get into the market with structure. Every good trade has three components. You've got an entry point, you've got a stop loss, and a profit target. We have those three things. Our success is going to depend on if the market follows through to our profit target, and if we can stay in there and not mess with our stop losses and not mess with our profit targets. We need to make sure that we stick in these trades until we get paid. That's the bottom line. So right here, what do I think about this trade? I have no idea. I will tell you that a 15-second chart is highly, highly, highly risky. But right now, who's to say it won't be successful? We're up a few $100. We have an opportunity here maybe to make a couple of dollars. We just have to see price really fly up to our 273 area, which is roughly about 17 points, and that's going to be close to a 1-to-1. You know, I believe, we're somewhere in that neighborhood. So we're sort of in the ballpark here, but a lot of times what will happen is these markets will flatten out, and you're just sort of especially on short time frames, you're just sort of at mercy to what happens. But we're still in bullish territory, and we're still profitable on this trade. I would love to see it run up and get our points. I'm just not necessarily sure that it's going to do it while we're on the live stream here. We'll give it a couple more price bars and sort of see how it plays out. But that essentially is it. Remember those components, guys. If you're going to trade short-term time frames, I'm talking 5-minute charts, I'm talking 1-minute charts. I don't recommend going to a 15-second chart, but if you have to, you have to. You can see right down here, you've got confirmation with the RSI is very important. Oversold territory, you're looking to take the buy. Where's the buy? Buy was right on the crossover. Once we got our bar close right in here, and our crossover was official, then we went ahead and went long, and we made a little bit of money. Now the market's sort of drawn against us. What would we say? Would we say we're in trouble here? Are we going to lose? I don't know. I mean, we're up on the day. The NASDAQ's in the green today, up about 0.75%. Is this the best trade location of all time? I wouldn't really say it's that great. We're sort of bought into the middle of the day's range, but on a 15-second chart with these technicals, it doesn't matter. It doesn't matter. Remember, if you're a technical systems trader and you're trading something like the 15-second chart, you're going to be making dozens and dozens and dozens of trades every single day. That's for sure. Will this one win? Will it lose? I don't know. We don't have to know. We've got our stop loss, we've got our profit target, and we've got our entry. 1 to 3% of our account balance goes on any one trade. I will let you trade up to 5%. I won't tell anybody. 5% is incredibly risky. And if you get up into the 7s and the 10s and the 12%, more than likely you're going to run into trouble. If you bet with a lot of leverage and huge position sizes, I have some good advice for you. Don't lose. Don't lose. Make sure you win. All right, everybody. That's really that's our webinar for today. Remember, if you're going to trade, if you're looking to trade, head on over to Switch Markets. Bring your ambition into focus. Those of you that don't already have an account, if you do get the account, remember we're launching the new wallets. Those new custodial wallets, those independent segregated wallets are a place for you to store your money while you're passing KYC and still enable you to take trade. Now, there are some limits on it because there is risk involved from everybody, the broker especially, that you haven't validated your KYC. But while you're doing KYC, that wallet can really help you. Be on the lookout for that hitting your client portal very soon. And then also Pine Connector. We showed you some Pine Connector functionality. Pine Connector is all yours for free with a deposit of $50 or greater. That's a fantastic value. We've also got algobuilder.com. It's an opportunity for you to use your AI or use your common ideas, your trading ideas, use that AI functionality, get that translated into MT5 code, MT4 code, and start running your own expert advisors built from your own trading ideas. So pretty good stuff there. A lot of value. That's really going to be the theme moving forward on the switch markets is going to be value. So you got your Pine Connector, you've got your algo builder. Also, we're live streaming. We're doing group live streams pretty much every day at about 1 p.m. Eastern. Feel free to join those. And we're also going to be doing exclusive webinars like the ones you just watched, like the one you just watched throughout the rest of this year and probably into next year. If you have any questions, be sure to leave them on the live chat, or once this video is posted to the Switch Markets YouTube channel, be sure to leave your questions or comments below. If you want to contact me directly, head on over to howtotrade.com, sign up, sign in, give me a private message, and I'll be sure to get back to you in short order. All right, guys, that's the 5-8-13 EMA. It's one of my favorite strategies, especially on short time frames. Just getting back to our trade. Are we making any money yet? I don't know. We're still in sort of a bullish position. Price is definitely sort of flattened out, but we've still got an opportunity to get up there and maybe get paid off a little bit later today. All right, everybody, that's all for me today. Thanks for joining us for this first ever Switch Markets live webinar. Be sure to check out the Switch Markets YouTube channel for all the videos and links to pretty much all of our materials. We've got a great blog going. We're going to have market analysis. We have that newsletter as well. A newsletter was pretty good call on silver this last week. We hope you saw that one. All right, everybody, until next time, trade the action well, and we'll talk soon. See you.